Okay, hello people. Welcome to the weekend video from bullways.org. I am not exactly prepared, but I'm going to go through the weekend video anyway, because I've got 5 minutes to do it, or half an hour to do it, so that's when I'm going to do it. It's late evening here now. Well, it's 20 past 5. It's already pitch black outside. So London is closed, so I figure it's time enough to just rip into it and go over what's happened this week. Another pretty awesome week in terms of, let's say, a shifting market dynamic. And we'll get into that later in the stock market, obviously, and actually in gold also. So we're sitting pretty good in gold. Okay, so let's just jump into the FX pairs right now, and we'll see what's happening. A bit of a stunted start there. Hope you all had a good week, and I hope you all have a nice weekend too. Now that that's started. Okay, so this is euro dollar, and I am again. Well, let's go to the 4-hour chart. I'm again tracking either this wave 2. It's more likely now this wave 2. I think this alternate count here is most likely kind of forgotten about now, because I think it's probably out of reach at this stage. We're most likely completing a flat correction here in a wave 2 in green here, and we should head down into a wave 3. That's the theory. We'll see what the action is doing to see if we can back that up. Okay, so it's a 3-wave move so far. There is a variation on this that I'll get to in a second, and which also stands for pound dollar also. So we could, for the moment, we can see wave A up, possible 3-wave, wave B, and maybe wave C complete. The other way you could view this, which would be the alternate count for the moment. It doesn't change the actual structure, but just the internal wave B here would be a little bit different. You could say that this was wave A of B, and this is wave B of B, and then we'd get a further decline in wave C of B. So it'd be a larger a complex wave B within the whole correction. So then that would leave us with wave A, very long wave B, and then another one up in wave C. So I don't prefer that count at the moment, but it's worth keeping an eye out for, because the internal structure here in wave B is not ideal, but then again, nothing ever is ideal, so you kind of just gotta run with what you have. Excuse me now, I'm kind of nursing a affliction this week. Okay, so it looks to me that we may have complete wave C complete, most likely at the Thursday high there. Was that Thursday? Don't give me a date on that. It won't give me a date. Will it give me a date? On the 20th. Yeah, sorry. Yeah, Thursday's high. We've kind of trended down off that. A little less than impulsively at the moment, but we just have to see if this develops into an impulse structure to the downside. So if we can get a 1-2 wave off those highs, then we would be sitting pretty for a decline into a third wave. So next week we want to see a decline off those that resistance band there to form a 1-2 structure to the downside in wave C. This could be wave 1 and 2 in pink. We don't know. It might go 1 degree higher than that to be in brackets. Sorry, a structure at 1 degree higher. We'll see how that develops. So for next week, we want to see that kind of resistance band hold, and we want to see a new impulse wave to the downside. So far, so good off the high, but we'll see how it works. The reason I've kind of picked that resistance was you have the initial target for wave C here. Wave C in brown would be for a break of the wave A high. So that would be the minimum target for wave C, and we did get that minimum target break. Plus the larger wave 2, the initial target for that larger wave 2 would be the previous fourth wave at 1 lower degree. So that's given us a nice tight band of target, say, resistance for that structure. We've hit that this week, so let's work on getting a bearish signal next week. Okay. Pound dollar, a little less sure on pound dollar. The fact over the last couple of days, or the fact that we've had this kind of contracting range over the last couple of days, is a little bit of a sign that this downside move is not complete. Maybe it's a fourth wave or a B wave. We don't know just yet. I had been expecting this kind of this run up to resistance in wave 2. It's kind of it's a little less likely. It's still the most preferred count at the moment, but it's a little less likely. The only other way of viewing this structure would be a 1 2 1 2 1 2, and maybe a beginning of a third wave. 1 2 3. Come on, get out of there. A 1 2 3 4 5, and then maybe a fourth wave, and then a fifth wave. So it's less than ideal. I like that kind of complex decline there. So probably a triple combination of some sort, or sorry, a double combination. So in fact, now that I've just mentioned that, this could be a B wave within a C wave. So we might get another drop. I reckon even by this evening or by overnight on Sunday, if we got a break of 126 again, that could suggest this B wave down is still underway, and I'll give you an idea of what that might be, what that might entail. It could be, you know, A, B, C of A, and then A, B, C of B, and then A, B, C of C. So it might be some real long, drawn out kind of ugly looking structure like that, which is not impossible at all whatsoever. Okay, so we've got this contracting range. If we get a break of 126, then we'd look for a larger B wave to complete somewhere down around 123. While on the flip side of that, if we get a break of that 127 area, 127.05, that's the marked previous wave 1, then that would signal a move up into a third wave of wave 3 of C of 2. So yeah, we're kind of, yeah, it's a strange one, isn't it? I think I'll leave it at that for the moment. The market has been dead this week in cable, so it's very hard to kind of pull out a larger theme from very little action. Okay, one little signal would be just to keep an eye on the triangle idea there for a breakdown down into that lower trend line again. Okay, I think I might elaborate on that tonight in tonight's update. Okay, so we moved off the action triggered the alternate count in dollar yen, and I'm going to go to the daily chart in dollar yen here to explain this. So we've got the 2015 high was at December 15, August 15, was it? Sorry, June 15 high was 125, and off that was labeled wave A. So off that, we were initially, I was thinking that this was the wave B low, and then we were working on a 5-wave structure up. We've always had this possible idea of a triangle in wave B, and of late, the breakdown in the price this week, or let's say over the last month or so, the failure of the price to break out has kind of leaned a little bit more in favor of this alternate account. And as with every damn triangle, it's very hard to pick it out as it's developing. It's such a strange phenomenon that yes, triangles in general are quite hard to track. So you'll forgive me for leaving it so late to switch to this triangle B wave, but in the end, it's still expecting a rally up in a C wave, and that would be a very large C wave, and I think we could probably be pushing up towards that upper trend line. So you'd be talking about a break of 140 in wave C, and that would be within the backdrop of a very large stock market decline, which has begun, as we're all pretty acutely aware of right now. Okay, so you have that 5-wave structure, and we're working on wave E to complete wave B right now. So let's get to the 4-hour chart. There's the wave D high, and now we're working on 3 waves down in wave E to complete that B wave. For now, it's not inconceivable that that wave E is coming to a close even right now. You can see that this trend channel here, connecting the action so far, has been filled. It was filled yesterday. So even right now, we could be talking about the close of wave E. But for the moment, I'm going to let this see if this C wave kind of expands a little bit bigger to see if that original target of the 108 area will actually be met. Very possible. We'll see how that goes over the next week or so. I'm still expecting that a breakdown in a 4th and a 5th wave down to around the 109, 108 area in wave C. So let's get to the hourly chart here. Now you can see that we have off the wave B high, we have wave 1, running flat wave 2, wave 3 underway, almost complete actually. Possible wave 4 of 3, either a triangle or maybe a possible triangle actually, I think, because of this the price pipped to a lower high and then is now caught within the range there. So you could be talking about a 4th wave triangle there within wave 3. Further drop down on Monday should complete wave 3 itself, and then over next week you would just be talking about a ranging price pattern, maybe to one new low in around the 109.50 or maybe 109 area, and that will complete 5 waves down in a C wave. So for next week, probably still favoring the downside, with the only caveat being the fact that that trend channel has already been filled. So if we get another break above 112 again, that would probably signal that wave E is complete, and we'd be looking for an impulse wave to the upside. So we're in that kind of shift between trends right now, and I think a rally in the dollar will coincide with a collapse in the stock market. Excuse me. And the reason being is people just they'll bid up cash just to get out of it. To get out of stocks at any price, they'll bid cash up. Okay, so here is the dreaded stock market. Now we broke to a new low this evening. I've altered this wave 1 and 2 scenario this evening as well, because of the move off off yesterday's low, off Thursday's low, formed a pretty neat 3-wave correction in wave 2, and we've got a breakdown again today. So excuse me, it looks like we're declining in wave 3 of 3 of 3 of 3. So that's a 4 degrees of third waves, and if that's the case, well then next week, Christmas week, well, we're not likely to get a whole lot of trading next week, but it would be, it may be within somebody's purview to come in and just sell like crazy into a dead market, which would be a bit stupid, really, wouldn't it? But, you know, us humans, we do strange things now and then. If next week is going to continue its declines, or if it's just going to be periodic kind of drops with kind of interim recoveries, you know, maybe it might even indicate a kind of an acceleration or a stepping into a third wave. And then the week after that, or once the market opens back up fully in January, we might get a complete plunge in January. That's very possible, given this wave count. On the 4-hour chart, you can see that we're moving down nicely into a third wave off that kind of failure high in wave 2. Yeah, we've fallen 3,000 points now, and we're back below the excuse me. We're back below the 23,000 level. So you have to go back a long way to find. We're back to October 2017. So over 14 months now of market action just lost in a couple of weeks. Okay, so, and by the way, I heard a statistic this week that this December has been the worst December since 1932 for the stock market in terms of percentage declines. So that is worth keeping an eye on. The very fact that we're mentioning 1932, where the economy in the US and, well, the worldwide economy moved into a very large depression, and it wasn't until, you know, the early 30s that the economy actually followed the market, and the economy shifted into depression. So if that's in store for us now, well, God help us, because I don't think people are as strong or as in general, or the general public is a lot softer now than we were back in. I'm including myself in that. We are a lot softer now than the general public was back in 1930, and that's for sure. Okay, so let's move on to gold. So here's gold. We've had a nice continued step higher this week. I'm counting this as a third wave up. We hit the initial target yesterday at yesterday's high, and that was around 1265. So we got a little break of 1265, and that was where wave 1 and wave 3 reached equality. So or sorry, yeah, it was a little bit above where wave 1 and wave 3 reached equality. It was where the upper price, where the price reached the upper trend channel on the 1 hour chart. But anyway, we'll get to that in a second. So my hunch is that we're moving up into a sustained rally in wave 3, and that's what we'll be tracking over the next couple of weeks. Yeah, so over the last couple of days we had these nice spikes higher, and they coincided with declines in the stock market, which was kind of the theory to begin with, where the stock market volatility or the stock market declines would drive the kind of desire to own precious metals again, whereas nobody's wanted to own them for years. So if this is just beginning, or if the declines in the stock market is just beginning, well, then the rises in gold are just beginning. And if it gets more chaotic, well, then gold should benefit from that in the medium to long term. So we hit that upper trend channel there, and so far today we've corrected off it slightly. It's a corrective looking move again. So I'm not against calling this again a series of 1-2 waves, especially if I'm expecting an acceleration higher in a third wave. So we could be building towards, like, if that's wave 1, 2, 1, 2, 1, 2, 1, 2, it could be a lower and lower and lower degree impulse waves, and that should lead to a kind of explosive move higher in gold over the next few weeks. We'd probably push that out to early January now. If that coincides with the stock market a possible decline into or a possible acceleration into a third wave down, and then we should see a possible acceleration into a third wave up in gold. So that's nicely kind of geared there. So it is. We've hit the initial target. We're correcting off it. Next week, I still want to see these higher lows hold. The most recent one at 1241.60, so we want to see 1241.60 hold, and we want to see a further break of resistance. I would like to see price make it up to the 1290 area, and that would be where wave 3 would reach the Fibonacci 161.8% extension of wave 1. So wave 3 in blue here would reach the Fibonacci extension of wave 1. So we'll just keep an eye on that over the next couple of weeks. Alrighty. Crude oil, again, I've been looking for a move up into a larger second wave. This triangle pattern ended up being on the flip side of what I was originally expecting. I was originally looking for, a wave A up and then a contraction triangle, wave B with a wave C to complete wave 2. That has moved. This triangle was moving within 1 degree lower, and that ended up being wave 4, and we broke down below the triangle. When was that? Monday or Tuesday. Once we broke out of that triangle to the downside, then at 50-54 or the 50-50 level, then we were looking at wave 5 completing at a lower level, and I'm still not entirely sure whether this fifth wave is complete yet. So anyway, on the 4-hour chart, you can see that we've moved up in momentum. We're off an extreme low in momentum, so I still want to see a second wave correction. We've got a nice clear-cut triangle there in a fourth wave, so that's the initial target for the second wave. So a push above 53 again, maybe into 54 to complete a second wave in 3 waves. So over the next couple of weeks, that's the idea here in crude oil, is for a 3-wave pattern higher, and there's no way of knowing how that pattern is going to develop, or how it's, let's say, yeah, that's pretty much it. How it's going to develop. I'm kind of pinning my flag to the idea of a pretty complex second wave. You never know. It could simplify from here. It could simply be a simple zigzag, so we could get 5-3-5 up. Honestly, with the amount of corrective patterns that there are, there's no way of knowing which way this cookie will crumble. So over the next couple of weeks into early January or mid-January, most likely a rise into a second wave. Okay. Alrighty. So here's the S&P again. We've moved this wave 1 and 2 up to the recent lows, and the fact that we got that's simply because of the fact that we got this 3-wave move here in wave 2, the 3-wave move to a kind of a spike high and then a sell-off again. So that suggested that this correction was a larger degree wave 2. So I've taken that as wave 1 down, wave 2, and we're moving down into a third wave again, and we could get a lower degree 1-2 again off that wave 2 high. So the market doesn't necessarily have to collapse today or over the next week. And the fact that there won't be a whole lot of volume next week does suggest that we will have to wait out some other corrective form happening here. I may be wrong on that one as well. If the market comes back in with full force on Thursday and Friday, well, then we could see an acceleration lower. But I think the larger count, if we got to the 4-hour chart there, the larger count is pretty solid. We were looking for these declines all along, and we got them. It's worth mentioning here, off the high, that we've filled a trend channel so far. So we need to see further declines to break out of that three-wave trend channel. I think the highs are in myself. I've thought that for a while anyway. Excuse me. I've thought that for a while anyway. The kind of cycle turn, or the expected turn into a downside of the stock market cycle and the economic cycle, is well overdue now. So the fact that we are getting this sell-off is right on point with what we would have been expecting. Is that the daily? Yeah, and on the daily chart you can see we have a right shoulder in place and a nice breakdown of the neckline, which was created back at the February lows of 25, 29. So we have a left shoulder, head, right shoulder in place in wave 2, and now we've broken the neckline, and it should be sayonara. It's a long way down to the previous fourth wave back in February 16. That's the February 16 low of 1813. So it's a long way down to 1800 from here. It's another 600 points. Well, we're tracking it every day. See how it pans out. So far, so good. That's what I can say. This is silver. Silver hasn't been as bullish as gold. The main reason I've been hanging on to the bullish outlook in silver is because silver will usually follow gold, if not right now, eventually anyway. So it's worthwhile keeping the bullish outlook for now. And you can see in the 4-hour chart, I'm tracking possible wave 1 to the upside. So let's get to the hourly chart. Off the extreme low at 1388, we've had a move up. I'm counting this as a leading diagonal, and then a running flat. And you couldn't get more awkward a pattern, but that's what it is. So we'll take it. Again, another run up on Thursday, and decline to a higher low again on Friday. So we still have an intact, trend line up off the lows. We're still creating higher lows, so in my mind that's still suggestive of a shift to the upside in the long-term trend. As you can see, the long-term trend is wave 1 up, second wave down, and move up into a third wave. Excuse me. So next week and beyond, we're looking at, just like gold, a possible acceleration up into a third wave. And now the 10-year. Let's get to the 4-hour chart and 10-year. I'm still sticking with the idea that we have a flat correction in the 10-year. There's an alternate count on the daily chart, and if we get a break of the critical or key resistance here on the daily chart is 122.40. So if we get a break of that 122.40, which would be the previous wave 1 lows, then we will switch to the alternate count, and that's a case of a 1-2-1-2 pattern. So we'll see how that pans out. Or actually, this would be, got to change this now while I'm looking at it, because otherwise I will forget to. The alternate count would be a 1-2-1-2 at a lower degree, so we get these guys in here, and that'll only be triggered if we get a break of 122.40. So let's get down to the 4-hour chart. I'm pretty happy with the structure, even though wave C has outrun wave A by a large degree right now. But we're right back at that previous fourth wave. We're hanging under resistance. We're a good bit under for the moment. And we seem to have 5 waves complete in wave C. So the move off the high on the hourly chart has not been fantastic. in terms of its internal structure. You can see it's kind of more of a drift rather than anything else at the moment. So we could be seeing, we could see one more pop early next week. But it's kind of, again, it's at that tipping point in terms of both the wave count and in terms of the internal structure. We're at that kind of tipping point for a shift back into the downtrend again. I think we've come far enough in a C wave now to start moving down again into a large degree wave 5 or a large degree wave 3. We'll see how that pans out. There's that resistance there, 122.40. So we're not, the high this week was created at 121.39, so 121.40. So we're 100 points off that high, and we've drifted lower again. So for the next couple of weeks, I want to see, in general, this won't be tradable at all until we see an impulse wave off the high, and most likely one at a larger degree with a break of 120.13, and that 120.13 level is the previous fourth wave. And if we get a break of that, well, I'd be willing to look seriously at a downside move in wave 5. Okay, so I think that is us done. I've gone through the 9 markets. I won't talk to you again on the video, at least. Well, I mentioned during the week there that I'll probably do a video maybe Thursday, so I might do 2 videos next week. Next week is a holiday week. I'm going to turn off the computer for a while and kind of spend some time with the family. Go to mass. Spend some time with the family and have a nice Christmas, and I hope the same for you all. I wish you a happy Christmas and you and yours happy Christmas, and we'll see you again either in a video or a chart update probably Thursday next week. Unless, if something horrendous happens on Monday, well then I'll probably jump in and update the charts and have a chat about it. I won't be able to stop myself. Okay. Thank you, everybody. We'll see you after the holidays, after the Christmas. Godspeed. Bye-bye.